All right, let's talk about interest rates and real estate investing. The two go hand in hand, but specifically what I'd like to talk about is why interest rates may not be the sole determining factor when evaluating investment opportunities. Yes, that's right. By focusing on other essential elements, we can really start to identify lucrative prospects and maximize some of our returns in real estate investing. And right now, all of the talk, of course, is on interest rates. And I want to try to put some of this in perspective because historically speaking, we are literally sitting on interest rates where they were in the 1990s, which is actually a little bit lower than they were in the 1990s. And we saw a boom in the housing market in the 1990s. But this is also far removed from where we were in the early 1980s, where we had 18, 19% interest rates. So keep things in perspective. And it's also removed from the 2 and 3% interest rates that we've seen for so long that kept a lot of homes artificially inflated in price and also a lot of artificially inflated money that was floating through this system. So let's put some things in perspective. And first, I want to start with cash flow and why if we look at cash flow, number one on my list, then you really start to see how interest rates can be separated from this entire matrix. Cash flow, the key consideration. That's what you should be paying attention to, ensuring that the property generates income, surpassing your expenses, including your mortgage payments. Even with high interest rates, profitability is achievable if rental income can cover those costs. It's important to remember that the real cash flow occurs when tenants pay off the property, making it a sustainable investment. So again, let's think about this. You buy a property with the bank's money, mostly 80%, 75% is coming from a bank. You're putting down 20, 25% or a little bit more depending on the type of loan, if it's a non-recourse loan or something else, right? So again, the bulk of it is on the bank's back. And yes, you might be paying a little bit more for interest rates given this environment right now. But think about it. You are building wealth with the bank doing it for you. You get all the tax benefits. You get all of the net worth being built up. Well, they have put up the money to do it. And now, as long as that cash flow in the property is there and it's covering your mortgage to that bank and you're putting a little bit of money away every month, then you're golden. So just think about what Gary Keller writes about in The Millionaire Real Estate Investor, one of the great real estate investing books of all time. I highly encourage you to go out and read it. He talks about using other people's money to invest in real estate, but he specifically talks about making sure that your cash flow and all of your expenses are covered and where you could profit $1. I think he uses the $1 analogy. I've always said $100. So meaning, let's say your mortgage is $500 a month. I'm just throwing out a number. And after all expenses and everything you've got to pay, including the mortgage, you're making $501, right? You're making that one extra dollar. Everything else is covered, but you're making $1. He says, go for it. And I tend to agree with him. I like a little bit more padding there. Now imagine after everything is said and done, you're making $600 and you have $100 of padding. Great. Now you've got $100. You've paid your mortgage. You've taken care of expenses. All of that stuff is taken care of and you're pocketing $100. Now think about it. That tenant is helping you to build equity and pay down that loan so that when you hit the point of true ownership, when that loan is paid off, now you get all of that cash flow. So again, it just comes down to the cash flow and making sure the numbers work. So even if you have a higher interest rate, making sure that you're building your net worth and you're receiving that cash flow to cover those expenses, that's where it's at, my friends. All right, number 2 on my list is property value. Now, think about this. Over time, real estate often appreciates in value. It's very difficult to think of a place where it actually goes down in value. And this is irrespective of interest rates. So if you've got a 5, 6, 7% interest rate, are we dealing with inflationary period right now in the United States? And is the interest rate a little bit higher? Great. Well, what is the long-term appreciation, do you think, of this property? Will it outpace inflation? If your plan involves long-term ownership, the property's potential for growth remains a really compelling investment, even in the face of rising interest rates. Again, I don't invest for appreciation, but I like to know that it's there. And every property I've ever owned has gone up in value. And we might go through these periods in a recession or a decline where property values will drop a little bit, which we're actually seeing some of that now in some of these bubble markets like Boise, Idaho, and Salt Lake City, and Las Vegas, Nevada, places that I would never invest. These are not investing markets. These are retail overinflated markets. So you're seeing some prices dropping a little bit. But again, overall value, long-term plan, not 1 year, 2 year little decline. I'm talking long-term. We get to see that appreciation. It's beneficial. And that's where we need to be focused too, not just on these interest rates. Because if you're just focused on interest rates, you're going to talk yourself out of investing. That's the bottom line. Number 3, market demand. Rental property demand and overall market conditions specifically impact investment returns. So look, we have incredible market demand right now. A robust rental market can help offset any negative effects of increasing interest rates, making it a resilient sector. Just think about where we're at right now. We need millions of properties in the United States. We are woefully in a crisis, a housing crisis. We simply do not have the homes. And so we are in an absolute demand for rentals right now, and perhaps the likes of which we've never seen before. So even with higher interest rates, that means that we can increase rents over the life of the loan. That means we can increase rents over the life of ownership of that property. But even beyond that, that means you're not going to be sitting on massive vacancies because everyone has a home to live in, so you've got all these vacant properties everywhere. No, we need homes more than ever right now. Number 4 on my list is smart financing. Various financing options and strategies exist to mitigate the impact of these higher interest rates. So you could negotiate favorable loan terms, or you could explore alternative financing options right now. They can enhance the affordability of the property and could also help cushion against potential challenges over the life of this loan. So you might be thinking, I have to go the traditional route, the traditional financing route. Well, think alternatively. There's all sorts of financial products out there that you could actually get maybe a longer form of credit. Natalie and I were able to get a large line of credit, which enabled us to buy multiple properties at one time. So there are a number of different creative financing options that exist out there. And it might not just be from the bank. You might be saying, the only way I can get financing is through the local bank. Well, that's not the case at all. There's plenty of investors out there who would be willing to come to you, smaller sort of hedge fund style investors who've pulled their money together, maybe 4 or 5 investors, and they're saying, hey, we see that interest rates are 6%. Well, we're going to compete with them and go at 5.5%, 5%. And because we want to work with investors and we don't want to have to deal with all of the red tape and hoops and hurdles that a bank would have to deal with. And it will enable you to go around that system. So you can absolutely reach out, go to LinkedIn and look for private money lenders and find out what their programs are like. Find out how they work with investors. So you don't have to be just stuck on the idea of these higher interest rates with these banks right now, your traditional banking options. Number 5 on my list, goals and time frame. So investment goals and timelines differ for everybody. Now, if your investment aligns with long-term plans, well, then short-term fluctuations in interest rates may not substantially impact your overall success, right? If your planning is for 30 years, maybe you're not really worried about this little bit of an increase in interest rates right now because God knows in a year, 2 years, you can always refinance, right? You can actually, or take a home equity line of credit out on that property and pay enormous amounts towards the principal balance and pay that loan off in no time. So there's all sorts of ways to look at this based on the timeline and how long you're in this game. Evaluating the bigger picture, aligning with your investment goals with personal goals is crucial. Make sure you know what your goals are. Remember, interest rates are undoubtedly important, but they should not be the sole focus when considering investing in real estate. Evaluating factors such as cash flow, property value, market conditions, and the demand for rental properties right now, financing strategies, and personal goals provides a comprehensive perspective, not to mention inflation. And is your money sitting there not working for you right now? Is it sitting in a bank losing value because of inflation? When in fact, it could be gaining value and preserving your wealth inside of real estate as a hedge against inflation. When you own real estate, it's a hedge against inflation. So even if you're not seeing the massive profits that you would like, because certainly higher interest rates eat into your profits, are you protecting your wealth by making sure that it's outside of the inflationary environment that is the U.S. banking system? It's worth noting that finding a property that aligns with today's interest rates can have tremendous potential for the future. By taking sort of a broader view, consider multiple factors, we can help identify a lot of areas that are poised for success. Now, if you are interested in real estate investing and you want a team that can guide you through the entire process, book a call with our team today at morrisinvest.com. We'll have links below in the description, and we'll see you next time, everyone.